at the right time.
Good morning. You're watching Bloomberg Quint. This is all you need to know, and I'm Alex Matthew. First, the headlines this morning. Asian markets are off to a positive start after better-than-expected earnings took markets on Wall Street to record highs. Marred by glitches in the EVMs, the third phase of the Lok Sabha polls saw a 66% turnout. The Reserve Bank of India concluded its second long-term forex swap and has infused close to 35,000 crore worth of liquidity. It has also announced that it will infuse a further 25,000 crore in May through open market operations. ACC's March quarter numbers were operationally weak owing to elevated costs. Ultratech Cement will be reporting numbers today. And Bharti Infratel, along with Indiabulls Housing Finance, are the two Nifty companies that will be reporting quarterly numbers apart from Ultratech. Well, let's talk about the US markets now. It was a day of record highs for the US markets, with tech stocks leading gains. Investors were left to wonder whether they were worrying too much about a potential recession. Meanwhile, the dollar also showed strength and Treasury yields dipped. Renita Young of Bloomberg News brings you all the updates in this report.
U.S. markets are higher on Tuesday, with the S&P 500 rising to its all-time high, all on the back of better-than-expected earnings. First quarter GDP comes out on Friday. That should give us a view of how the economy responded to the U.S. government shutdown, as well as the fourth quarter market's rout. Meanwhile, Twitter shares rising more than 15% on the back of sales and daily user growth exceeding analyst estimates, helping lift Snap and Roku. Hasbro rallies on upbeat earnings, helping retailers. What also helped retailers was Whirlpool, which saw dipping sales but record profits thanks to U.S. President Donald Trump's trade war with different companies over the year, more namely with China. Now, Verizon was down. First quarter revenue met estimates. However, the company lost more phone subscribers, and Coca-Cola first quarter revenues beating estimates for earnings per share, and shares were rising there. Earnings continue with Snap, Amazon, Facebook, Tesla, and Microsoft, among other companies. Meanwhile, WTI was up. Gold declined near that 4-month low, and the Bloomberg Dollar Index saw its highest in 6 weeks, with the U.S. dollar strengthening versus major currency competitors. And Bitcoin is back in the news, reaching its first golden cross since October 2015. That's when the 50-day moving average moves above the 200-day moving average, a sure sign that the bulls are back in town, according to analysts. And that's a look at your Tuesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
Well, the bulls certainly are back in town in the US, but to find out whether they've made it all the way over to Asia, let's go straight to Rosalind Chin, who's joining us live from Hong Kong. Morning, Rosalind. Any sign of the bulls early this morning?
There definitely are. In fact, just as Hong Kong and China opened, we did see a lot of the board I'm looking at least, turn green. So right now we have the Asia Pacific Index, MSCI Asia Pacific Index, up by almost 1/5%. The Nikkei, Topix and Kospi all trading high, although Kospi is kind of flat, but still in positive territory. The Hang Seng Index up by about 0.4%, Shanghai Composite up by about 0.25%, and the CSI 300 making gains of more than 0.5% right now. So yes, that good mood in the US on Wall Street is translating over to Asia. Asia is not immune so far today. Now, we could see some movement on some of the stocks here, though. Looking at China Unicom, that's making gains of about 1.6% right now. That's after it posted some good results, with first quarter net income growing more than 22%. According to Jefferies, it massively outperformed its rival, China Mobile. Now, China Mobile is the world's biggest telecoms carrier, and its first quarter results, so not quite so great. Profit dropping the most in 2 years to $3.5 billion after it ended domestic roaming fees and also seeing a decline in data tariffs there. So a tale of two different mobile carriers in China. China Mobile right now dropping 1.26%. Both of those, of course, under a lot of pressure, a lot of watch on those as we go forward with the Chinese government goes forward with unrolling 5G in the country as well. Elsewhere in the region, we saw LG Display that reported first quarter operating losses, which were wider than estimates. So that right now is dropping more than 3%. And finally, Australia. Now, right now, the ASX 200 is actually up by 1%. We did see some slightly disappointing inflation data come out just a few moments ago. Now, quarter on quarter for the first quarter, no change there. So that was up by 0.2%. That was according to estimates. But year on year, we saw an increase in inflation of 1.3% against estimates of 1.5%. So a bit of a miss there. We have seen a bit of a reaction there on the Aussie dollar. We did see a bit of a drop there. Right now, the Aussie dollar, I'm just taking a look. It's at 70 cents to the US dollar and a little bit of movement there on the numbers. So back to you.
Thank you so much for that, Rosalind. Well, oil has been in focus this week, and oil prices remained near their highest level in 2019 after the US withdrew waivers to countries importing crude oil from Iran. Now, sources have told Bloomberg that Saudi Arabia is planning a cautious response to this move, and they do not plan to immediately increase output. Stephen Stabczynski of Bloomberg News has more.
Well, closest sources in the government are saying that they're tentative about raising output, to say the least. I mean, there are a few reasons for that. You know, last year, the Trump administration said the exact same thing. They came out and said they wanted to move Iranian oil exports to zero, and they wanted Saudi Arabia to help fill in that gap by boosting production. Saudi Arabia listened in 2018 and boosted production to record highs. But the Trump administration sort of pulled the rug from under Saudi Arabia and decided to issue these waivers, allowing 8 nations to continue importing Iranian crude. That, of course, led to a massive drop-off in the price of oil, and the Saudi government was burned. So this time around, they said they want to more wait and see. They want to see the Iranian output actually fall. They want to see exports fall before boosting their production. At the same time, they made a pact with Russia and other OPEC nations to bring down and cut production by millions of barrels a day to try to bring balance to the market. So by boosting their output, that could potentially hurt their relationship they built with Russia over the last few years. There will be an OPEC Plus meeting with Russia next month, and also an official meeting the month after that. So perhaps we'll see some more kind of direction as to where Saudi Arabia will go after they meet with the partners in the Middle East as well as with Russia.
Stephen, this decision from the US obviously not going too well with some important oil consumers. I'm thinking China in particular. How's the reaction been?
Yeah, China has been the biggest pushback to the Trump administration. They said that the U.S. government is kind of stepping outside of lines. At the same time, you're also seeing Turkey echo that message. Now, while the governments in South Korea, Japan, and India said that they're going to work with the U.S. government to try to potentially extend these waivers or try to talk with them in some sort of negotiations, the companies, the importers of the crude from Iran in China, in Japan, and South Korea, and India are already looking at other options. They see the painting on the wall. They see that this is going to stop the exports from Iran. It's going to put a lot of pressure on them. So the companies are already looking at other places, and places that they're looking, of course, as I mentioned before, is Saudi Arabia, as well as the United States, to say one. So while the governments in China might be saying something somewhat competitive towards the U.S. government about what they've done, the companies are definitely looking for different options going forward.
Now, a lot of moving parts are causing, well, Brent crude as of this morning to just cool off just a little bit, but analysts are projecting a further upside to oil prices. Francisco Blanch of Bank of America Merrill Lynch is one of them. he expects this rally in oil prices to sustain, expecting it to rise to as much as $100 a barrel if the headwinds to supply continue. Here's what he told Alex Steele of Bloomberg early on.
I think the Saudis are gonna be holding tight here. See what the final outcome of this is on May 2nd, which is only a few days away at this point, and then see how those reductions in Iranian exports are actually accomplished. So they're going to be monitoring the situation carefully, and obviously they cannot really afford another sell-off in oil prices down to $50 a barrel. So my sense is the Saudis, as well as the Abu Dhabis, are going to be watching the price carefully and adding barrels as needed. And I think the same thing is true for U.S. shale producers. I don't think they're going to rush to ramp up supply like they did last year. Capital discipline is the name of the game in the U.S. shale patch. So I would expect this rally to be more sustained. We have an $82 a barrel target for Brent, which, by the way, we've had since November of last year, and we see that price those prices in this quarter, and then we think there's a risk of a further spike into year end.
If you take a look at the Bloomberg here, this is the curve now for Brent versus just a month ago. We've obviously seen a huge re-rating in the front end by, I don't know, about $10 or so, but the back end really hasn't re-rated as much. Is that appropriate? Is that enough being priced in?
Right. So I think it's a great point that you're raising. We've been making the case that, I mean, oil longer term is a $50 to $70 commodity. So it's hard for the back end to move away from that range. Now, here's the risk, right? The risk is that the front end keeps going up, and eventually, because let's say that we end up losing a chunk of Libyan production or some other country, or maybe we have an uptick in the global economic cycle because the U.S.-China trade negotiations eventually get to the right place, and we have an uptick in global PMIs. I think that's what could actually start to pressure prices higher, and it may be a little bit more difficult to do it to stop a rise in prices in an accelerating economic growth environment. Remember, so far growth has been decelerating for months now, for quarters, right? So I think if we have an upturn in global growth into the end of the year, if this upturn comes together with all these fuel specification changes, IMO 2020, basically this bunker fuel change at the end of the year, this is the kind of risk that could create a spike into year end. We don't think it's very likely. We think it's just a risk, but something to really watch carefully. Oil could be a lot higher than it is today under those circumstances.
All right, and so definitely something that we in India are going to have to watch very carefully because it could have major bearings for the Indian economy. But Agam Vakil is here to tell you what to expect today. There's a lot to look forward to. Agam, what's on the list today? Earnings as well. It's 3 Nifty earnings, I believe, and also what are the levels on the future and option space?
Yes, well, big earnings for the Nifty. We watch out for that. And as far as the Nifty is concerned, 2 straight days of losses, and well, the expectation is that there will be consolidation, but that wasn't the case yesterday. It just so happens that while we start on a very somber note, eventually we see the benchmarks give very sharp movements in the latter half of the session. So we're going to keep an eye on that one. As far as the Nifty is concerned, we did see marginal losses towards the end of the session and mixed moves for the mid-cap and the small-cap indices. But moving on to your banking indices, there was a little more weakness there. Of course, it was essentially the private sector banks which were bearing down on the indices. But moving on, we are also taking a look at how areas are panning out. So mixed cues coming in, certainly. Tata Motors are down 1.5%. Some weakness for HDFC Bank and Vedanta. Wipro, on the other hand, is up 1.5%. Some gains for Dr. Reddy's, ICICI Bank and Infosys. But moving on to your institutional flows, again, not too much to speak for. These numbers are nowhere close to what we have been used to in the month of March and most of April. And of course, we're looking at that minus 237 odd crores. It doesn't really match up. But when it comes to contributors, it was a fairly evenly poised day, placed one. As far as your HDFC twins are concerned, they were bearing down on the indices. On the other hand, the likes of Reliance Industries, ONGC, and Infosys did provide some amount of support to the indices. But what about the futures and options space? Well, it is expiry week, and we're keeping an eye on rollovers, currently standing at around 42%. And again, traders are hesitant to carry their positions forward considering so much volatility. Do remember, it is the 23rd of May when we are going to get the results of the general elections. So there is a very, very long time before we actually get to anywhere. And that is perhaps the reason why we are seeing that resistance build in. Nifty banking futures again seeing just 42% increase in, or rather in rollovers. So we watch out for that as well. But in terms of your range, now at this point in time, it's essentially 11,700 mark, which will provide the bulk of your resistance on the upside. On the lower end, it's likely to be somewhere around 11,500, 11,600. But in terms of changes too, and that is where we saw a lot more writing around the 11,700 call, as you can see there. But moving on, we talk about the WIX continues to rise nearly at 25. At one point in time, it was within kissing distance of that mark, and it is going to remain at elevated levels, as we all know, considering its general elections. But moving on, as far as your put call ratio is concerned, that came off to a certain extent to around 1.3. In terms of stocks, we're watching out for Adani Power, DLF, and IDBI Bank, which are in the F&O ban, as is the case for Vodafone, Idea, Jet Airways, and PC Jeweler. Do we have any changes? Yes, Reliance Power is the new entrant in the F&O ban. So we keep an eye on that one, and Reliance Capital, of course, moves out. Well, a bunch of these stocks will be moving out of the futures and options segment as a whole. Considering 34 securities will exit the market. But in terms of other stocks, well, a whole host of others to keep an eye on. There's a lot of unwinding coming through in Dish TV, Voltas, as well as IDBI Bank. So we'll watch out for these stocks. And of course, whether or not we finally see some amount of consolidation in today's day of trade, Alex.
Thanks so much for that, Agam. Well, let's talk about what's making headlines across the globe. Paul Allen of Bloomberg News brings you the first word headlines.
As UK lawmakers resume cross-party talks to seek agreement on a new deal, the government is testing support before potentially putting a key piece of Brexit legislation to a parliament vote next week. Prime Minister Theresa May could also face a leadership challenge, with one poll putting Boris Johnson 17 points ahead of the pack. The White House has confirmed the dates for trade talks, saying Treasury Secretary Stephen Mnuchin and Trade Representative Robert Lighthizer will fly to Beijing next week for discussions from Tuesday. The statement says the negotiations will cover intellectual property, tech transfer and agricultural products, and that top Chinese negotiator Liu He will travel to Washington from May the 8th.
We're not there yet, but we've made a heck of a lot of progress. We've come further, deeper, broader, larger scale than anything in the history of U.S.-China trade, and I think that's a good thing. I don't want to make a prediction or a forecast, but we've gotten closer, and we're still working on the issues.
Singapore Finance Minister Heng Swee Keat has been promoted to Deputy Prime Minister, a move that puts him in pole position to succeed current PM Lee Hsien Loong. Heng will take up the position on May 1st and will retain the finance role while also chairing the Future Economy Council and the National Research Foundation. He suffered a stroke in 2016 but returned to work 3 months later. The so-called Islamic State says it carried out Sunday's bombings in Sri Lanka that killed 321 people and wounded hundreds more. Initial investigations are focused on a domestic jihadist group, but authorities say it must have had help from abroad to carry out such coordinated attacks. Sri Lankan stocks returned to trade on Tuesday, with Colombo All-Share Index falling to its lowest level in 6 years.
All right, let's turn to earnings now. Bharti Group's tower arm, Bharti Infratel, comes out with numbers today, and it's expected to be a stable quarter for the company. Somit Sarkar is here to tell you all the details. Somit, what's going to provide that cushion?
Well, if you see, compared to last quarter for Bharti Infratel, the fourth quarter of financial year 2019 is expected to be largely stable. The revenues are expected to come in mindfully higher at around 3,663 crore rupees, while the EBITDA of the company is expected to remain flat at close to 1,500 crore rupees. Margins are expected to remain stable at close to 41%, while the net profit of the company is expected to be higher by only 0.5% to close to 651 crore rupees. Now, in this quarter also, we're expecting higher rentals and some tenancy additions coming in for Bharti Infratel. Now, however, this higher tower rentals and the tenancy additions would largely be offset by the loss in revenue that the company is expected to see because of the tenancy exits that the company had received in the last quarter. So overall, the quarter is expected to be largely flattish. Now, the one thing that could surprise in this quarter would be the exit penalties. Now, that could surprise the company and aid the financial performance in the fourth quarter. Now, the company is expecting exit penalties worth 90 crore rupees in the fourth quarter, but the number could well largely be higher or on the lower side. So we'll have to watch out for that number. And secondly, the Q4 is also a seasonally strong quarter when it comes to the energy business of the company. So the energy EBITDA is also expected to be higher and aid the financials in the fourth quarter of financial year 2019. Now, the key things to watch out for from the fourth quarter earnings would be the trends in gross additions and the further exits. Also, additional exits that have been booked in the fourth quarter. Along with that, updates on organic fiber rollout, and if plans of any inorganic fiber rollouts would be keen thing to watch out for. Along with that, any merger update that the company gives would also be a key thing to watch out for from the fourth quarter earnings. We also have Ultratech, which will be reporting its numbers today, and Nikki is joining us to give us the details on the same.
With Ultratech Cement, cost optimization again is expected to play out for Ultratech Cement, but it remains to be seen whether that's the factor which this time around in quarter 4 would be playing out for all the cement players, because ACC clearly has disappointed. But the basic numbers first. Top line, we are expecting a 14% growth out there to a number of around 10,250 odd crore. Northwards figures to that. EBITDA is expected to go up by as much as 11.5% for this company, and the number that we're looking at is 1,896 crore. In terms of margin, we're expecting a slight contraction coming in to the extent of 30 basis point. 18.5% compares to that of 18.9%, and profitability of the company too is expected to be around that 8%, weighed down by the depreciation and to an extent the finance cost after the JP acquisition. But then just in terms of the EBITDA growth being lower than that of revenue growth, that's account of the faster growth that we're expecting in top line. Having said that, basic expectations, we're expecting a good volume growth out there, 5.1%, and the number that we'd like to watch out for would be 19.4 MT. Realizations is expected to go up by 9%, and EBITDA per ton too is expected to inch up by as much as 6% year-on-year basis, while we're expecting higher realization and the cost saving measures mainly to aid the operational efficiency from Ultratech Cement, because the lower pet coke prices and freight rates are expected to aid to an extent the margin contraction. I mean, they're going to be rather stemming the margin contraction, which is expected to be in the range of around 30 basis points, almost stable, you could say, because in this quarter we've seen the domestic pet coke prices have actually cooled off. We've also seen moderation coming in the diesel prices, and the freight rates are also expected to give a saving of around 3 to 4% given the change in axle norms. And it remains to be seen whether Ultratech could deliver.
Absolutely. Thanks so much for that, Nikki. And Somit, of course, he'll be back over the course of the day to tell you what those numbers actually come in at, and of course the analysis of those numbers. But let's talk about some of the other stocks that you have to watch out for in trade today. Mishika Parak is joining us now to tell you about the stocks in news. Good morning, Mishika. What's on your list today?
Good morning, Alex. I'm going to start off with the important earnings. The first one being Indiabulls Real Estate. They came in with a weak set of numbers. Their revenues were down 43% to 1,822 crore rupees. EBITDA's down 94% to 165.8 crore rupees. And EBITDA margins are at 9.1% compared to 82.7%. The net profit is also down 95% at 108.6 crores. And the lower revenue and higher costs of land and construction led to the fall in EBITDA EBITDA and profit. The company wants to focus only on Mumbai and NCR markets and has decided to divest Century Limited, which was the parent company that houses Hanover Square Property, London. The promoter will buy the London asset for £200 million. The company had purchased this property for £161.5 million and is currently valued at £189 million. The transaction is subject to minority shareholder approvals. Then we have ACC, which came in with an average set of numbers. Their revenues were up 8%. Net profit is up 38%. EBITDA is up 8%, and margins are at 13.5% compared to 13.8%. They had higher than expected power, fuel, and freight costs. Realization per ton was up 2.5%, but it was still below estimates. And this miss was led by a mixed deterioration. EBITDA per ton is at 708 rupees versus 787 rupees. Sterlite Tech came in with very good results. Their revenues were up 111%. Net profit is up 47%. EBITDA is up 43%, and margins are at 17.6% compared to 26%. The company lowers operating margin guidance again to 18 to 20%. Then we have Tata Global. Earnings growth was affected by a one-off loss from associates. The revenues were up 4% and net profit was down 61.5%. Higher tax expenses and exceptional loss dents their profits. EBITDA is up 6% and margins are at 8.8% versus 8.6%. There is volume growth of 12%, which is the highest in the last 5 years. Then let's look at the stocks that we need to look out for. Lupin. US FDA classifies inspection of company's Indore Unit 2 facility as official action initiated. The plant is already under warning letter by US FDA. Tata Global Beverages to buy branded tea business of Dhansari Tea for 101 crore rupees. And lastly, Sasken Technologies board approves buyback of 20 lakh shares representing 12% of the equity shares at 850 rupees per share. The buyback cost stands at 170 crore rupees and is done at 20% premium to current market price.
Thanks so much for that, Mishika. Well, as most of you know, the third phase of the Lok Sabha polls were conducted yesterday, and they saw a healthy 66% turnout, and that's notwithstanding several issues that were really talked about with regard to the EVMs malfunctioning. One of the constituencies that went to the polls yesterday was Thiruvananthapuram, where Congress MP Shashi Tharoor is seeking a third term in office. He spoke to Tamanna Inamdar yesterday. Listen in to what he had to say.
I've been saying towards the latter part of the campaign that it was clear we were going to win with a bigger majority than last time. But today I will amend that and say we're going to win with a much bigger majority than last time. The turnout has been terrific. The weather gods have been kind, over 71% so far, and in many places the queues that were admitted by 6 o'clock when the polls had to close were given tokens and asked to wait until the polling machine was free to receive their votes. So voting is still going on in some places at 8 p.m. in Thiruvananthapuram. It's been an amazing turnout. I think the people of Thiruvananthapuram are voting about the future of India, and they don't want the BJP to be part of that.
But to be fair, you've had a tough fight this time round, isn't it? And Mr. Rajashekaran, would you say he is your biggest challenger rather than the CPI? How much of an impact also has the Sabrimala temple issue had?
Okay, so on the first point, yes, the media let us believe that this was the BJP's seat. There were even a couple of media surveys that said they were winning. There was a certain amount of hype about the BJP campaign, which, as you rightly said, was centered on Sabrimala. But in fact, I think today's evidence suggests that there was a whole amount of exaggeration in this presentation. First of all, as far as the BJP campaign itself was concerned, they've made, I think, a big tactical mistake in focusing only on communal polarization. That was their only message. Literally, they were asking for votes in the name of Sabrimala, of Lord Ayyappa, of Nayar women whom they allege in one of my books 30 years ago had defamed. It was just an absurdly one-sided campaign, and they thought by doing all this they would place me on the defensive. But I had a positive message to give, both about my own performance for the last 10 years, which we could point to and my campaigners could point to very concrete achievements, and equally my own role in speaking up for an inclusive India on the national stage, in Parliament and across the country.
All right, that's of course part of a larger conversation that took place last evening. If you want to watch the entire conversation, you can log on to the website bloombergquint.com. You'll find that and a lot more. And speaking about the lot more, let me tell you a couple of stories that you'll find if you look up the website. The Reserve Bank of India has concluded its second long-term forex swap to infuse liquidity into the domestic banking system. In a statement yesterday, it said that it had purchased $5 billion in foreign exchange for a tenure of 3 years and infused 34,874 crore. Demand was as strong as it was the last time, seemingly. Bids worth $18.65 billion were received. Now, Japan's SoftBank is reportedly looking to make a $2 to $3 billion investment in India's fastest growing telecom firm, Reliance Jio, as billionaire Mukesh Ambani looks to deleverage business by selling stakes. All right, that's all you need to know going into trade today, but there's a lot more to talk about, and that'll come up in just a short while. Do stay tuned. This is Bloomberg Quint.